All right, so you're all welcome back. Um, in our last meeting, I think that was on Monday, last week Monday, we began looking at the area of budgeting and budgetary control. So, as a recap, we went through basically some theoretical areas that you should be aware of, talking about why a budget is prepared, what is the process of preparing a budget for a company, the various approaches to budgeting. And then we finally summed that up with some behavioral issues that come up during the budget setting process. Okay, so those are the things that we looked at. Today, we are going to look at the various types of budgets, okay, or some budgets that are prepared during the budget setting process. So when we're looking at how is the budget prepared, when we're looking at that, we saw that we will have to prepare as a company a set of budgets. Together, we call them the master budget. So the first budget to be prepared will be called the functional budget. So functional because this is a budget for the various functions within a typical manufacturing organization. Okay, so let's look at the budgets that make up the functional budget. We can see here what we call the principal budget factor, and it was a term that we mentioned when we were going through how a budget is prepared. Now, I mentioned that typically for a manufacturing organization like what we're having here, the principal budget factor is typically the sales, okay, the level of sales that we intend to make, because every other thing else is going to flow from our desired sales target. Okay, so mostly for your functional budgets, the first budget that is prepared is what is the sales budget. Now, that notwithstanding, like I mentioned, for a particular planning period, the principal budget factor could be something else. So if, for example, there's a limit on the availability of raw materials, clearly that is going to be the limiting factor or the principal budget factor. And so for that planning period, we are going to plan our entire operation. So our entire budget will be around what? How much materials or resources we have available. So in that case, we are saying the raw materials will be what? The principal budget factor. And we'll have to prepare that first, and all the other budgets will follow. Okay. But by default, like I'm going to show you, the sales budget will be what? The first budget that we are going to prepare. And it's very simple. The sales budget will just show how much sales in terms of the volume or quantity we would want to make. Okay. And at which price we intend to what? Sell those products. If the budget is on a monthly basis, and clearly in month one, how much do we intend to sell? What is the price? Second month, same thing. Okay, so that is basically what makes up the sales budget. Very simple. Then aside budgeting for our revenue line item, we also have to budget for our costs. And here, the emphasis will be on what? The production costs. So for the cost budgets, we are trying to look at all costs that goes into production. And so now that we've mentioned production, the first thing we need to understand, how many goods do we need to produce? Okay, so let's take it from the top. Your sales, that is what is bringing you money as a company. Now, even before you sell, what do? You have to produce your goods. Okay, so Right after the sales budget is prepared, the next budget you have to prepare is what? The production budget. Now, to look at this budget, how much goods to produce in units, we'll have to first of all start with what? The sales unit. And then we are going to adjust the sales units by what? By inventory movement. So how this adjustment is made. What's the issue? Come on. Can you hold on for me, please? I'm coming. All right. Okay. So I'll take you through how this adjustment is done. Then once you know the number of goods you need to produce, right? The next question is, before I produce those goods, clearly I will need some raw materials, right? So we need to budget for how much materials we are going to use. And that'll be based on what? How much we want to produce. Now, that is the material usage budget. And we are saying this is prepared for the resources required to achieve what? The production target. But the next question is, the materials that we require, that is as per the material usage budget, is that the same quantity of materials that we are going to purchase? Okay, is that what we are going to send the purchasing manager to go out to purchase for us? That's the question. So if the materials we will require for our production is different from the materials that we will actually purchase, then there will be the need for us to prepare what we call the material purchases budget, just to show us that there's a slight difference between what the material usage budget and the material purchases budget. How do we get the materials we are actually going to purchase? It is, first of all, the materials that we said we are going to use, and this is going to be what? Adjusted. Okay? It's going to be adjusted by the increase or decrease in what? Inventory levels for a particular period. Okay? That will help us get the materials to actually purchase for our production. All right. Do not worry. I'll take you through that adjustment. And then once we've sorted out materials, which is one of the main product costs or production costs, we move to the next product cost. And this will be what? The human power or the people we are going to need to work for us. Now, based on how much you want to produce, you what? You prepare a budget around the workers required to help you fulfill that production target. So for our labor budget, it's also based on what? Our level of production. So how much or how many workers do we need? So that is going to come from how many goods are you going to produce and what is the time required to produce one product. You find the product of the two and it is going to give you what? The hours that you require to work. Okay, so that is basically it. So we have what? The labor usage budget. So these 1, 2, 3, 4, 5, these 5 budgets are the main ones. Okay, they are the main functional budgets. All right. To make sense of all of these, we'll have to solve a question, okay, to help us understand at a very basic level how the functional budgets are prepared. I'll see my screen. Okay. So we have the functional budget. Okay, this question is quite simple. It will just take us through the format, okay, of preparing the functional budget. So I read. Um, the XYZ company produces three products, X, Y, and Z. For the coming accounting period, budgets are to be prepared using the following information. You have the budgeted sales, okay. Here, we've been given the quantity and then the price of each. Then here we have standard usage of raw materials. Now, it means that for this company, for any products that they are making, they need two materials to be able to complete a product. And the materials are wood and varnish. So maybe we can say this company is producing furniture, right? That is why they will need the wood and then the varnish to be able to do that. So the information here refers to the quantity of wood required to produce one X, the quantity of varnish, right, to produce one X. Same will apply for Y and Z, right? That is what we have here. Then the standard price of the raw material. So what is the price at which a wood is bought? Or what's the price at which a varnish is bought? That is what we have here. Then the next set of information is on what? Inventory levels. Now you can clearly see here we have inventory of finished goods, and then here we have what? Inventory of raw materials. And I think I mentioned this earlier, okay, or in earlier lectures. All right. So what we'll be expecting to see are what the opening level of finished goods inventory are, okay, opening and what and closing. You'd expect to see these. So for the three products, you have the opening and closing inventories. Then when you also come to the inventory of raw materials, you expect to see something similar. You want to see the opening and closing inventory of raw materials, and that has been given to us. Then when we come to the labor side, we've been given the standard hours per unit. This is the time required, okay, by our workers to produce one of each of the three products. And then the information here relates to what? The costs, right? The rate per hour, which we call the labor rate. Now, understanding all of this information, we are being told to prepare sales budget, production budget, the material usage budget, the material purchases budget, the labor budget, and then the budgeted profit and loss statement. Okay. All right. Now let's pay key attention to what is in the bracket. For some of the budget, we want it in both quantity and value. For some, we just want it in what? Just quantity or units. All right. So let's start. The first budget is the principal budget factor, which by default is what? The sales budget. Okay. So X, Y, and Z. So we'll just start with the sales units. Okay, that is 2,000 for X, 4,000 for Y, and 3,000 for Z. This is where I'm picking the information from. Then the prices, okay, or the price per sales. That is 100, 130, sorry, 150. So that therefore means that the sales, when it comes to the sales value, Can I get any help with the computation, or you say it is too early in the morning? Okay. All right. So this one will be 200,000.
Then we have 520,000.
So 520,000.
And then 450,000.
And then 450,000. Okay. All right. So we could even find the total, okay, of all the three sales. And that will be
1,170,000.
okay. All right. So sales budget, very simple. Okay. I won't lie. Very, very simple. Let's proceed. What's the next budget I mentioned? Anybody to remember? You can type it out if you don't stop. What's the next one?
The production budget.
Labor usage budget.
No, it's a production budget. Labor usage is the last one. Okay. All right. So please, it's a production budget. That's the next one. Okay. So again, we have X, Y, and Z. So the first, what we start with, right, in the production budget is the sales. So please remember. So sales units. Okay. We start with the sales unit, and that is 2,000, 4,000, and then 3,000. Then this is where the adjustment, what I was talking about, comes in. So please, it's just simple. When it comes to the production, right, the adjustments in the inventory we are going to use is the inventory of, let me bring it here, inventory of finished goods. I beg you, remember this for me. Inventory of finished goods. Okay. So this is how the adjustment is going to look like. We have the opening and closing inventory. So that means that if you bring your sales units, you are going to add, okay, closing inventory, and then you're going to less opening inventory. And here it is finished goods. Remember this, please. This one is also what? Finished goods. Okay. So it's very simple. Information is provided here. Right. So that is 600,800. Then we are going to less the opening, which is 500, 800, 700. That is all. Once you do this, you are going to get what? Your production units. So here, this is 2,100 units. This is 4,000 units. And this one is 3,100 units. You are done. Then the next budget we are going to look at is the materials. So we need materials, okay, for the production. So we have the material usage budget. So how much materials are we going to use? Now, the key question is, the company has two types of material. So let's bring the materials here. The materials are wood and varnish. Wood. Okay. Wood, which is in kilograms. And then varnish, which which is in liters. Remember, we have three products: X, Y, and Z. Now, to get the quantity of materials to use, we will start with the production units. So for X, we said we want to produce 2,100 products. X will require 5 kilograms of wood to produce one. And so therefore, that means if we want to know the total quantity of wood needed to produce all of X, right, that will be 2,100 by 5. And that, I believe, will give us 10,500 kilograms of what? Of wood. Also for X, we will require varnish, okay? And so that will be 2,100 units by 2, okay? And that will be 4,200 liters of varnish. So we'll do same for all the other products, okay? Right. So production units for Y is 4,200 by 3. And then that gives us 12,600 kilograms. Also for varnish, 4,200 units by 2. And that'll give us 8,400 liters of varnish. Then for Z, we said we want to produce 3,100. So the quantity per unit is 2 for wood, and that is 6,200. And then for varnish, we have 3,100 by 1 liter per unit, and that basically is 3,100 liters. Okay. Right. So in terms of the quantity of wood and varnish to use, what is the total for the two materials?
Wood is 29,300.
Okay, 29,300. And the varnish, I think, will be
700 liters.
700 liters. Okay. Right. So we have the materials required based on how much we said we want to produce. But the next question, like I was saying, is this what we are actually going to purchase? Okay. So if there's a clear difference between what we are going to use and what we will purchase, then we'll have to bring in what we call, or we have to prepare the material purchases budget. Okay, material purchases budget. So for the material purchases, again, it is the materials we are interested in. So we have wood, and then we have what? Varnish. So we'll start first of all with the materials usage, right? Required. And from the earlier budget, it is 29,300 kilograms, and then 15,700 liters. Then we are going to do an adjustment, okay? So also for this, we are going to add the closing inventory And then we are going towards less the opening inventory. And here, the inventory in question is what? The raw materials. Raw materials. Okay. The raw materials. All right. So we have it here. So the closing inventory is 18 and 9. So 18,000. And then the opening inventory is 21 and 10. All right. So what's the quantity of materials that we'll have to purchase?
For wood, I have 26,300. And then for varnish, I have 14,700.
Okay, 14,700. All right, these are the materials to be purchased. But the question also further went on to say we should determine what the cost will be. So this is the quantity. So if you want the cost, the money value, you therefore have to multiply that by what? How much is it going to cost you to get one? So for wood, the price is what? 8. For varnish, the price is 4. So we can just multiply this by the standard price. Okay. So 8 and then 4. So when you multiply, that'll give us material purchase cost of
Okay, wood is 210,400.
right. This is the money value. Okay.
And then for varnish, I have 58,800.
Okay. All right. So when we even add it, what will be the total in terms of the cost, total material cost for the organization?
269,200.
Okay, 269,200. All right. Okay. So some of these figures, we'll use them when we are preparing our income statements. Okay. Right. Then, finally, we can look at the final budget, okay, which was the labor. Okay, so we have the labor. Labor usage budget. So for the labor, again, it is going to be based on what? Our production. Okay, it's going to be based on our production. Just like the other budgets were. So we'll start with the production unit. And that is 2,100 for X, 4,200 for Y, and then 3,100 for Z. Then the next question is, okay, for each unit of X, Y, and Z, what is the time required, right? So this will multiply by the hours per unit. Okay, that's the time per unit. From the question, this is it, 468. Right. And so that'll give us the total hours required to be. We'll multiply these two. This one will be 8,400 hours. This will be
25,200.
25,200 hours. Okay. And then finally,
24,800.
all right, 24,800. Great. Now, the rate paid for all the workers is $3, right, per hour. So it's either we are multiplying 333, right? Or we can just add up the total hours required for the entire job, and then we just multiply it by what? The rate per hour of $3. We are going to get the same thing. Okay. All right. So what will be the total hours? The total hours for the entire job. So this plus this plus this.
58,400.
All right. So 58,400 hours will be required. Now, the total labor cost, okay, for all our products will be the 58,400 hours by the rate per hour, which is $3 per hour. And that gives us total labor cost of
175,200.
$175,200. Okay, that is basically about that. So we have the labor budget. Then finally, the question says prepare an income statement. Okay. So the budgeted profit or loss account. Now this will be for all three products. So we can just do it once. Right. For our income statement, what do we start with? We have our sales. Okay. So for the sales, we have information already from the sales budget, a total of 1170,000. So our sales will be 11. I hope you understand that this is for all our products. So that's the total. Okay. Then once we have this, we are going to less our cost of sales. So for our cost of sales, it will be our opening inventory. Now, please remember the opening inventory in question here is for the finished products. Okay, finished products. That is what makes its way into what? Our income statement. So we have the opening inventory, then we add our production cost. Okay, so production. Remember, we did something on how to prepare a management accountant's income statement, right? Then we are going to less what the closing inventory of your final product. Okay, and that'll give us our cost of sales. Now, we learned something very important, that when it comes to inventory, right, we value it at cost. Okay, so that will mean we have to determine what the unit product cost of the three products will be, and that is the basis on which we are going to value our inventory. Okay, so remember we had X, Y, and Z, and so we have to find their product unit cost. So that's a working that we'll have to do down here. So this one will be workings one, and that is product unit cost, or in short, the cost card, right? Okay. So I have X, Y, and Z. So again, what will form part of the cost of producing each one of these three products? We have direct materials, right, going in there. And for the direct materials, we said we have two of them, wood and varnish. So we'll have wood, and then we'll have what? Varnish. So per the information, we were told that when it comes to the wood side, this, okay, it is 532. Okay, so we have 5, 3, and 2. When it comes to the varnish side, we have 2, 2, 1. So 2 for X, 2 for Y, and 1 for Z. What are their prices? For wood, it is 8. For varnish, it is 4. Okay, so 8, 8, 8. 4, 4, 4. All right, so this means that we are going to spend $40 or 40 cedis. This one will be 24 for Y, and this one will be what? 16 for Z. When it comes to varnish, it's going to be 8 for X, 8 for Y, and 4 for Z. So for just material cost, we are 48. This one will be, I believe, 32. And this one will be 20. Then we bring what? Our direct labor. Okay? Our direct labor cost per unit. And here in the question, we have the time per unit, right? Given to us. So that will be 4, 6, and then what? 8. So the labor rate was given as $3. So that would be 4 by 3, 6 by 3, and 8 by 3. So this will give us 12. This will give us 6, 3, 18. This will give us 24. Right? So that is basically, there were no direct expenses and any overheads. So this is basically going to be our total unit cost. So when I add the materials and the labor here, this is going to give me 60. Okay, so this is the unit cost, 60. This will give me 50. That is materials plus labor. And this one will give me 44, materials plus labor. Okay, so we are going to value our inventory using what? These figures. I hope you remember. All right, so to again make the work very simple for us, right? Let's do those workings down here. So I'll have workings too. So I'll have here opening inventory. So for the 3 products, then let me also have here closing inventory. Okay, closing inventory. Also for the 3 products. So I have X, Y, and Z. Please, I hope you are following. It's very straightforward. Same here, X, Y, and Z. All right, so from the question, when we come to the inventory of finished goods, the opening, we have 500, 800, and 700. 500, 800, and 700. For the closing, we have 6,000 and 800. So 600, 1,000, and 800. Now, these inventory, the units are going to be valued at what the unit cost for both opening and closing. So this means that for X, it is 500 by 60, Y is 800 by what? 50, and Z is 700 by 44. Okay, so please help me with the what the values will be. And same will apply here. So 5, 6, 30. So I believe this is 30,000. 8, 5, 40 to 40,000. What would this one be, please? If you can help me. $700 by 44 is
30,800.
30,800. All right, thank you. So when we add all three, what do we have? Now, 800 by 44 is
35,200. So
35,200. All right. Okay. So this will give us so above the 70 plus this so 3100. All right. Okay. 800. Then for the closing side, 121,200. Oh, thank you. So we can just so this one is from workings 2. Opening inventory is 100,800. And then the closing inventory we are going to deduct is 121,200. All right. But for the total production cost, remember that we looked at the materials, how much we are going to purchase, and then we had the cost. So these are some of the benefits we get from preparing these earlier budgets. Okay, because it give us the total material cost for all three products to be 269,200. And then when we came to the labor too, for all the three products, the total cost was what? 175,200. So for production, okay, we are going to add, so let me bring this down here a bit. All right, so so we have the material cost, okay, so let me say total, and then we also have the total labor cost, right? And this is from material budget. This is from our labor budget. Okay, right. So the material I think was, let me see, 269,200. And then for the labor, this is this one, 175,200. All right. So when we do all of these, it will give us our cost of sales. The cost of sales is what? 444. Is that so? What will be the cost of sales? This plus this plus this minus this.
424,000.
424,000. Okay. 424,000. Are we all getting the same thing? Okay. Right. So when we deduct that from our sales,
746.
746,000. Okay. All right. So that becomes our profit. Okay. There were no other overheads. So this becomes our profit for the period. All right. So that's basically about that. This is just a very brief question, right? It was just to help us go through the various types of budgets that we have to prepare, right? Or the various types of functional budgets that we have to prepare. All right. Let's look at there's a second question that will be a bit, if I should say, challenging, right? So let's look at that one. And I think once we are done, we can have a solid idea of how to prepare functional budgets. So I'm coming. Okay. So let's look at this question. Squash refinery. This is a past question. Okay. So Squash refinery has planned the following sales for the first 4 months in the year. So we have the months, and then we have what the products that they are basically producing, right? Gasoline and diesel. So these are the sales units. The proposed X refinery. So after they are done refining the crude and all of that, that gives you the gas and what and the diesel, gasoline and diesel. The prices are 12.5 and then 10.8 per liter for the gasoline and diesel respectively. And it goes on to say that 1 metric ton of crude, when processed, can yield 2,000 liters of gasoline and 2,500 liters of what? Of diesel. The inventory policy of the firm or the company is as follows. So they have information on closing inventory at the end of each month. For the finished product, they are saying that the closing inventory is twice of the monthly sales for gasoline, and then for diesel, it is 150% of the monthly sales of what? Of that product. Then they also bring you here what we call crude. Okay, so if this is the finished product, then it means that the crude will be what? The material. Okay. Sometimes I do not tell you that this is the raw material, but when you go into the refinery space, it is the crude oil which is refined or process to get your diesel, petrol, gas, and then kerosene and all of that. So you have crude also here, and that is 80% of what the following month's requirements. That is how you get the closing what inventory of the raw material. Okay. Then you also have information on the opening inventory. So for the finished product, the opening inventory for gasoline is 200,000 liters, diesel is 140,000 liters. And then they also have for crude, right? So this is the opening raw material. That is 140 metric tons. So for the crude, they are measuring it in metric tons. For the products themselves, they are measuring it in what? In liters. So no problem. Now it goes on to say that note, the purchase of crude. So what is crude? Right now we know that the crude is what? Is the raw material. So it is saying the purchase of the raw material is based on what? The production requirement of one of the products, which is gasoline. So the material purchase for crude, or the material purchase budget for crude, will be based on what? The production requirement of gasoline. Very important note. So it says we should go ahead to prepare the following budget. The sales budget for gasoline and diesel, and then what? The quantity of crude to be purchased. So in other words, prepare the sales budget, and then what? Prepare the material purchases budget. That is all. Okay. All right. So let's look at the sales budget. For the sales budget, we are going to prepare it for, I think the question says for the first 3 months, okay? For the first 3 months. All right, so we have month 1, month 2, and then month 3. We have 2 products, gasoline, so I'll put here gasoline, or what we call petrol here, and then what? Diesel. So gasoline, and then diesel. And for month 3, I have gasoline, and then diesel. Okay. So for every sales budget, what do we need? We just need the units, okay, or the volume. Let me put a line here to separate the 3 months. All right, and then we'll just need what? The price. Okay, the prices. Right. So we have gasoline, diesel for the first month. Gasoline is 140. So I think I want to hang 3 zeros, okay, to make our work a bit faster for us. So month 1, we have 140. And then diesel is 100, okay? So 100. Month 2, we have 200 for gasoline, and then 130,000. So liters, right? And then month 3, we have 220 for gasoline, and then 180 liters for diesel. Then we have the prices so gasoline is 12.5, diesel is what? 10.8 for all of them for the respective months. Okay, so 12.5 and then 10.8. So same thing, 12.5, 10.8. All right, so we'll have the value here. So let's focus on month one. What will be the sales value? So that's 140 by 12.5. Okay, so please, gasoline first. Gasoline is
1750.
1750. Okay. And then diesel would be, I think, 1080.
1080.
1080. Okay. Please, we found three zeros. All right. Okay. What about gasoline? Okay. 2500. Diesel is
1404.
1404. All right. Gasoline for month three. So, okay. All right. 2750. And then
1944.
1944. Okay. All right. So that's it for the sales budget. Like I'm saying, very straightforward. Okay. Now, per the question, it says the purchases budget. Now, you see, the key question is when it comes to the functional budget, you need to understand that it is in what? In stages. Before I go out to buy my raw materials, I need to know how much I'm producing. So even though the question didn't say that prepare the production budget, you should know that that is the next budget for you to prepare. That is all. Okay, we need to prepare the production budget. Now, it did mention that the quantity of raw materials that we have to purchase, which is going to be the material purchases budget, will be based on what? The production requirement of gasoline. So at the end of the day, the quantity of gasoline you are going to produce is what is going to determine the quantity of what? Of crude you are going to what? Buy or purchase. And so for the production budget, the focus will be based on what? How much gasoline are we going to produce? We are going to what? Only focus on gasoline. Okay? So there should be a production budget, but the production budget will be what? For gasoline. So again, let me write this note that to determine, okay, please, to determine the quantity of the raw materials, okay, which in this question is what? Is crude, right? The quantity of raw materials to purchase, we first need to ascertain the quantity, okay, or let me see, the unit of production. And so therefore, we need to what? Prepare production budget. Okay, prepare the production budget. So that's basically about that. So based on this note, that is what we are going to do here. We are going to use the gasoline to ascertain that. All right. So for our production budget, we said we'll have to first of all start with what our sales unit, and then we'll do the adjustment in what inventory levels. That is all. So we have the following months: month 1, month 2, month 3. For some reason, we'll bring the month 4 also, because we'll need some information from there too. Right. So in doing your production budget, we'll start with sales. Now, since we are focusing on gasoline, our attention will only be drawn to what were the sales units for gasoline. So these are the figures that we'll be picking. Okay. All right. To make our work simple, I will also hang the 3 zeros. Okay. Hang 3 zeros to make it very fast. So sales units, straightforward, 140. Okay, 140. And let me also put here that this is in liters. Okay, they are in liters. Right, very crucial. So 140 liters, month 2, 200 liters, month 3, 220, and then I think for month 4, for gas, it is what? 250 liters. So we adjust. So what do we do? Add closing, okay, inventory, then you less opening inventory. And again, what do we say? This is finished goods, finished. Okay, finished. All right. Now we come here, we have information on that. It says that closing inventory finished. This is twice of the monthly sales for gasoline. So for a particular month, what is the sales requirement? Multiply that by 2 or twice that. Okay, and that is going to be our closing inventory. So for the first month, sales requirement is 140. So twice of this, right? So that means that for month 1, that will be what? 280. Okay. Month 2, this will be 400. Month 3, this will be 440. And then month 5, this will be what? 500. Okay, please, I hope you are on the same page. Twice of what? The monthly sales requirement. All right. Then it says that the opening inventory for finished product, that's gasoline, is 200 liters. So that means that in the first month, the opening inventory will be what? 200, and we are going to deduct that. But since we are looking at the budgeting periods, what you will not be told is that, and what you should know, right, is that the closing level of inventory for one period or at the end of one period will be the opening inventory for the next period. So if this is what we are beginning the month with and we are ending with 280, it means that for the second month, we are going to open with what? 280. Right? Because that's the closing at the end of month 1. So we are going to deduct that. Same will apply for what we have here in month 3. The closing will be the opening right over here. And then same will be for the 4th month. So closing here, opening here. I hope you're all on the same page. All right. So that's about that. So what therefore will be the production unit? Okay, so
224.
220, 320,
Months, months.
260, and then 310. Okay, so that is basically it. Now, the question goes for it to say that what we are going to produce for gasoline is what is going to determine how much crude we are going to purchase. Okay, all right. So ideally, the next budget we are going to look at is what what do we call the usage budget, right? And once we get the quantity that we are going to use, we have to adjust by what the inventory levels. Okay, so let me just take you through the steps because that's what I've taught you. So let's first of all look at what the materials usage budget. Okay, we could skip it. We could have skipped it, but let's do it. So we have the materials usage budget, right? Materials usage. So month 1, month 2, let's see month 3, and let me bring the 4th month. Okay, right. Here we're not giving the quantity per unit is, we're not told that, okay, but rather they give us a very important line here which says that 1 metric ton of crude, if processed, can yield what 2,000 liters of gasoline. Now it is for us to determine whether the quantity of crude to be purchased, we want to measure it in liters or what, in metric tons. Okay, but I advise that we look at it in metric tons, since crude is measured in metric tons. So the basis for conversion is what has been given to us here. So 1 MT, okay, so let me put here, for the material usage budget, we want to look at it in what? Metric tons. And the basis for conversion is 1 MT of crude is equal to what? 2,000 liters of gas. Okay, so 2,000 liters of gasoline. So the stage is set for us. If I therefore have 220 liters of gasoline to produce, right? 220,000 of gasoline to produce, then I can find its equivalence in what? In metric tons. So 1 MT is equal to 2,000 liters, and therefore 220,000 liters will be equal to what? How much in metric tons? So please, for all of them, right, we are going to divide, what do we have it? The quantity in liters over 2,000, right? And that'll give us what? The quantity in metric tons. I hope we all follow. Okay, all right. So when it comes to the usage, in month 1, it will be 220,000, okay, 220,000 liters over 2,000. And how much will that give us? All right, so we'll have 110. So please, this is in metric tons. Okay, all right. Then month 2, we said 320, right? So 320,000 divided by 2,000. So it's the same thing that is going to apply here. So we just change this, and this will be 320. So that will give us 160 metric tons of crude, okay, to be used. All right. Then we come to the 3rd month. that will be 260,000 divided by 2,000, and that will give us 160 metric tons of crude to be used. Is it
No, it
160?
says
No,
130.
130. All right. And then finally, this will be 310, okay, divided by 2,000. And that gives us how much? Okay, so 155 metric tons. Okay? 155 metric tons of crude to use. Now the question is this the quantity of crude that we are actually going to purchase? Is that it or not? Okay, so that is where the materials purchases budget, okay, comes in. So remember, that is what you were being told to do. But before you arrived at this, you have to what? Prepare production and prepare what? Usage before you come to the main thing. So again, for the respective months, it says for 3 months, but let's just use what we have here. So 1, 2, 3, and then I'll bring here 4, right? So we start with the usage, okay? So month 1, again, this is in metric tons. So month 1, that is 110. Month 2, that is 160. Month 3, this is 130. And month 4, this is 155. So what did we see? What's the adjustment? You add what? Closing inventory. And then you less the opening inventory. Okay? And this is for, remember, raw materials. So here, let me just put here, okay, let me do raw materials. That's crude, right? So raw materials. Great. So let's come to the closing inventory policy for this firm. When it comes to crude, they say it is 80% of the following month's requirement. Okay, 80% of the following month. So how much crude do we require in month 2? That is 160 metric tons. 80% of it is what we are going to use as what? The closing inventory of crude in the first month. That is what I mean. Okay, all right. So please, 80%, therefore, it means that in month 1, you have what? 128. I hope we follow. All right. So same will apply to, what do we call it? Month 2. So that is 80% of 130, and that is 104. When we come to month 3, is the reason why we're doing this, right? 80% of 155, and that is what? 124. Let's come to the opening inventory. For opening inventory, these first two are what? Finished product, but crude is the raw material. Okay, so the opening inventory for crude is 140. So I'll bring here 140. But that's just for the first month. For the subsequent months, what we ended with will be the opening in the next period. So it means that in month 2, we have 128. And then in month 3, we have what? 104. Okay? Then this will help us what? Ascertain the quantity of crude to purchase. All right, month 1, what do we have?
98 metric tons.
98 metric tons. Month 2, I think we have 136. And then months 4, we have 150. Okay, so that is it. So you can see that in both questions, it's the same thing we are doing, but how you find the figures to put in there is what is going to vary. The first question was simple, it was given to you straight away. This other question, you had to what? Look out for it yourself. But the format or the processes still remains the same. And so for me, this is what I want you to have at the back of your mind. How we go about preparing what? The various functional budgets. Okay? All right. So that is basically about that. Oops.